Hi everyone, this is Rob Roy and welcome to this week's Elliott Wave Elite U.S. market update. Well, we've been talking about this for several weeks now, this narrowing of the upward trending pennant pattern that was occurring in the S&P 500, what I usually refer to as the market here in the U.S. because I think it's a greater representation than the Dow. And the fact that it had gotten so narrow, it really looked like something was about to happen. Doesn't mean which direction it's going to break, but that we were ready to move, especially with this narrowing over the past 3 weeks where it was really in the middle of the tip of that pennant pattern. Well, on Thursday's breakdown, we kind of broke underneath the trend line and then closed right back just above it. And then Friday we did go down again and close below it. And we've talked about before, you need a second day, a follow-through day, confirmation day, whatever you want to call it, in order to confirm that it is indeed a breakout and the start of the wave 4. We'll see how the market reacts at the beginning of the week and if we get that follow-through day. One thing that's very interesting is to go over onto the SPY, bring in volume, as you know we always do, and back-to-back above average volume days. We did have that a couple weeks ago here, but back-to-back above average on the downside could definitely indicate that we are getting the beginning of the wave 4 correction. We really need another correction in the market, honestly. I mean, you get another correction just as the Elliott Wave is forecast, and then you rally towards the end of the year would be in line with seasonal type trends as well. Plus we have the midterm elections. There's going to be some uncertainty there, and it all kind of makes sense. That almost makes you nervous, doesn't it, when everything seems to make sense? The market always doesn't do things that make sense, but it pretty typically follows the Elliott Wave pattern. If you've been following along with us, you're well aware of that. Looking at the VIX, we have that break to the upside of the VIX, and that coincides with a downward move. We move to the downside, we create more volatility than we move to the upside, and there's the breakout of this descending triangle pattern that's been in place for months on the VIX, hovering down, as you know, that lower support level at the 12 range. So we've broken to the upside. Love that as far as an options trader. The more volatility, the better. We like when things move. One of the things that we talked about as far as a reason why the market could break to the downside has to do with interest rates. And I wanted to go back and remind you of what we had looked about all the way back at the beginning of the year when we first started this. We've been doing these recordings now for almost exactly a year. And back at the beginning of the year, we talked about this interest rate chart, and there's the Elliott Wave pattern. We had the wave 5 that ended in May, and then we started a new upward trending wave 5 pattern with the wave 3 occurring right now. But if I take that off, I'm going to take the Elliott Wave pattern off, because remember, Elliott Wave is patterns within patterns. We have the 5 wave patterns, but we also trade the corrective patterns, flats, zigzags, and triangles. And we talked about this being a primary A wave, so I'm going to go ahead and label that. We're going to spend a couple minutes talking about this because it's fairly complex, and it's a little deeper into Elliott Wave knowledge and education here. So it's a good thing to talk about. Moving down to this B wave correction. So at this point in time, we've got a monowave A and a monowave B, and you know that the likelihood is that we're going to get a complex C out of that. And with this fib extension, we've been talking about an eventual target. Even when we got up to 31 in May, we said that's not going to be the high because we need to satisfy this 100% extension in the Fibonacci extension of the wave C. And we finally did. We finally got there. It took a while, but Elliott Wave is complex at times, but it's accurate. That's the main thing. And we got there. We got to the target. And I'm going to go ahead and take this away so that we can take a look at some of the patterns that occurred within here. So let's just pull these down just a little bit, and then we have that zigzag pattern that occurred here. Well, let me draw the big wave C first. So there's the completion. So that was the wave C, but it's complex, and there's all kinds of things that are going on in between. The first is this zigzag pattern that occurred here. Now when you have back-to-back patterns or waves within a wave, sometimes you have connecting waves. Those are labeled as X waves, if you remember that from an Elliott Wave seminar that you may have attended, where we talked about these patterns that when they're back-to-back, sometimes they connect, sometimes they go right into the next pattern. But it's pretty clear to see when you look at where the patterns evolve. So that would be labeled with a small letter A, B, and C. So that's a zigzag pattern that occurred, and very similar to a wave 5 pattern. When you have a zigzag, a directional zigzag, you correct. You know how the main wave 5 pattern will correct to the previous 4. Well, here we have this correction back down from the entire zigzag pattern. So I'll label that as an X wave because it's satisfying the retracement of the zigzag pattern, retrace the entire move back to the B, and then we went into a flat. So that was connecting the end of that zigzag pattern into the flat, and this is about as perfect of a flat as you can get. I mean, it's just dead on, dead sideways. That's also labeled with a small letter A, B, and C, because remember, we're still within the larger C wave, and all this was going on within multiple 5-wave patterns. So you can break this down, you can trade long-term, short-term, whatever you prefer. And there's trades that can occur from it. It's just understanding it and seeing the patterns and then being able to take advantage of them. And then we'll label that with an X because that was the completion of the flat, and then we started off into a new impulse pattern, which caused us to reach the end of this larger zigzag pattern, which again, to remind you, is all going on, all this stuff is happening within a larger pattern. Patterns within a pattern. You don't have to trade super long term if you don't want to. You can break it down and trade these shorter term patterns, which is what I like to do. But you always want to keep the bigger pattern in mind. In other words, while all this was going on, we still knew all the way back from January that eventually we were going to hit this target. That's what Elliott Wave forecast a long time ago. So back to the fundamental stuff, this volatile move that we had in interest rates towards the end of the week also occurred with jobs report. We had a jobs report that showed that, and this is an indicator that a lot of people have been waiting for the future signs of inflation. We finally started to see a wage and average hourly wages increase. And a lot of people use that, right or wrongly, but they just do as stuff that they watch to indicate inflation. And so we've been adding a lot of jobs, unemployment has been dropping, all those things have been going on, but it hadn't gotten to the point where wages were going up. Now last week I talked to you about how prices were going up on the producer level but hadn't been passed on to the consumer level. So that's where some of this inflation stuff is going to start to compress profits, which is why people look at higher inflation in a negative light. And on top of that, then we have the Federal Reserve, who's constricting money supply by raising rates. We've got a lot of things going on, and it's made the market a little bit nervous. And again, this could be the start of the wave 4. We'll see if that gets confirmed on Monday. Looking at the dollar, continues its move back to the upside. As we mentioned last week, we satisfied this retracement back to the previous 4, and even note that we had the zigzag pattern within there on the move back down. It wasn't just a straight mono wave down. So again, things you can trade all over the place. Doesn't really matter which is the larger Elliott wave, if it's a wave 3, if it's a wave 5, if it's a retracement back to the 4, all these things that are going on, stuff's happening within them that you can trade on a shorter term basis if that's something that you're interested in. So the dollar continues to gain strength, and if the Federal Reserve keeps raising rates and the interest rates go up along with the Federal Reserve. My point is not just because of the Federal Reserve, but because of these ancillary things like inflation, etc. Then the dollar is probably going to stay a bit stronger. Looking at our case studies, we mentioned last week that it's been my experience that you don't get three false breakouts. Usually if you have a head fake one direction, a head fake the other direction, then the next move is the one that stays, and that's exactly what happened with CLR, and we were able to send out an alert to all our subscribers and close this position out with a nice gain. So it did exactly what it was supposed to do. Now, we're going to make history today. As I mentioned, we've been doing these for almost exactly a year. We're just a couple weeks shy of a full year of doing these weekly reports, complete with live case studies. Well, forward-moving case studies, not Monday morning quarterbacking, not backtracking, none of that kind of stuff. And we looked at this one on MMS, and you can see we have the wave 4 here. Look, we're moving up to the wave 5 high, and as I advance it, that's where we were. There we broke, and we broke down to a new wave 4. Now, when you put on a position based on where you're in the pattern that you're in before, if that pattern is violated, then you need to close that position out. And you might say, well, this wave 4 could go down to 61.8, and that would still be a level and move back to the upside. It may very well do that. And it may hold here at the 54% level, right around a 50% fib retracement. But that's a different pattern than what we were trading before. So the prudent thing to do is to close this out. So if you follow the rules, when you break the previous 4, which was right here at 64, when you break that, you close your position out. So we've done that. So we're out, right? So we were trading at 65. The stock is about $1.50 lower, and it amounted to about a 12% loss in this case study. And that's why I'm saying we're making history, because this is the first time in a year. Think about that. Think about that. The first case study we've shown in a year that winds up in a loss. So if you haven't renewed your data feed for your profit source or integrated investor by now, I don't think there's anything I can say or do or show you that's going to get you to move, because that's just an unbelievable record. But it's just me analyzing Elliott Wave. It's not anything specifically that I'm doing. So if we take a look at just to show you why it's important to stay prudent and follow the rules, look what's happened since then. We broke down again. The Elliott Wave relabeled. We're no longer in a wave 5 pattern to the upside, and we continued lower. That's why when you break the 4, you get out. Now we're down at 62, which is almost $2 lower than where we would have been, which would have been a bigger loss if you didn't follow the rules. So not unusual with the market in general correcting to see other shares follow along with it, stocks follow along with it. That's what happens. The majority of them usually do follow the market. So this could be another sign that we may have a bigger correction to come in the market and move down to that wave 4. And if it gets confirmed, then we'll flip the switch and trade to the downside, or we'll put on more strangles, either one. But we'll certainly take advantage of it. MasterCard is still in the wave 3. This uptrend has not been violated. So this pattern is still good, even though it did move back down with the market. So we're testing that. Again, very similar to the market. In fact, the chart looks almost identical to the market, doesn't it? Pretty fascinating that MasterCard looks almost like the market itself. So this one will probably continue to trend. Maybe it won't, but we'll just wait and see if this one continues to move with the market. But for now, it's okay. And then the new one that we added last week, same things, also still in its wave 3. Hasn't been enough movement there to affect this one either. So we'll see how this one plays out too. We'll see if the market rebounds or if we continue this move down and do move into a correction. Will be interesting to see how the market handles the uncertainty of moving into the midterm elections here in the U.S. next month. So it would be a seasonal time. October is normally not a great month in the U.S. markets, and then we have the elections. So a lot of things going on that would tie in, as I mentioned, that would kind of make sense with the wave 4 starting. So that wraps things up for this week. Hope you've had a wonderful week. Next week's going to be interesting to see. Stay tuned. Take care, everybody.